Welcome to The Weekly Trend, a podcast for navigating the markets through the lens of technical analysis. The Weekly Trend podcast is provided for educational purposes only and does not constitute any professional advice. Listeners should not act upon the information or content without first seeking advice from a registered financial planner.
Welcome back to the Weekly Trend podcast. My name is Ian McMillan. Today I am joined by our research analyst, Kevin Ferrari. It is September 8th. The S&P is sitting at 44.54. A week with a lot of action and maybe not so much action. Kevin, is there anywhere you would like to start?
Yeah, I suppose. Might as well get the inaction out of the way first, huh?
Yeah, a lot of still hanging around up here.
Yeah, I feel like every time I'm on this thing, it's after a week we've gone literally nowhere, so I think it might just be me.
Could be. Maybe we're jinxing it.
Mm-hmm.
Yeah, so, S&P, Nasdaq, uptrend still, for the most part, what they were. A little bit of consolidation. I guess you could say we're sideways since middle of July. Obviously, we know there's been a strong rally. So I think pretty practical behavior there from those two indices. I think those two indices in particular are a great point to the fact that the growth, mega cap, large cap theme is still pretty intact. If I look at S&P growth versus S&P, right, breaking the new highs over the last couple of weeks. You look at mega caps versus S&Ps, strong breakout this week. That's MGC versus S&P, just using the ETF there. So, it's still like we've said, this theme, like it or not, it's still out of these larger names that are at least outperforming the broader market.
Yeah, really, it's pretty kind of thin, I guess, and sparse once you get more in like those value areas until you really start seeing any players. But kind of seems at least broadly growth in general is the one pulling the weight for sure. Even like IBM, look at IBM, kind of the run it's had this summer. That's a name I haven't looked at for I don't even know how long.
Yeah.
The chart itself looks necessarily all that great, but
IBM potential very, especially if you look at a weekly or monthly chart, that's a big potential base to be moving out of. You had in fact, we were talking about right before we hopped on, Cisco, another big, we'll call it a .com bubble name that's actually right up pretty close to those .com highs. It's more of on a dividend adjusted basis.
Like Oracle looks pretty good.
Oracle has gotten a lot of attention. There's definitely some of these older, they're definitely right. They're not as sexy as your Nvidias and your Teslas and your, whatever, all the other names, Apples.
It's like your parents' tech stocks are like the ones that basically it.
Exactly. And Apple. You've got Apple in the notes. What did you want to touch on there?
Yeah, looking a little, I guess shaky, probably the best way to put it.
I agree. Yeah.
Like that potential false breakdown kind of the end of August. Looking pretty good. And now breaking down below like 181 again.
Yeah. I think the best case scenario at this point, and this would be, let's say it'd be normal. I'm saying it wouldn't be painful. So Apple, big rally, 58% rally off really since the beginning of the year. It really didn't bottom in October with the broad market. Went ahead and actually made multi-year lows to end the year, begin the year. In fact, real nasty candle on Apple, very first trading day of January. Has gone up 58% since then. So to me, I feel like best case scenario, I don't know if we get this or not. I'm with you. I don't need to own it if we're below 181. There's just no need. We've had a couple attempts to break 181. in the last few months. Neither of them worked. Best case scenario is this consolidates and I assume just like wraps around 181, 180.
That could even maybe like pull back closer to 170. I mean, I guess that wouldn't be unreal.
No, I
Yeah.
think that's the best. Now, if that's going to happen in a stock like Apple, right, that kind of has we're not talking about some small cap biotech here. So I think you wonder, like, what kind of ripple effect does that have? Clearly, you would want to see probably value stocks start to take back some outperformance. And so growth, if we look at SPYG, very far from all time. I mean, SPYG, so S&P large cap growth, is another 20% till it reaches its highs of Q4 2021. SPYV, I'm sitting at all, I mean, for all intents and purposes, has already made all-time highs. It's sitting up there. So it kind of has been elite. Now, it didn't have as big of a sell-off, but it is something that we've had. Another thing we have obviously noted down here is the strength out of energy. I think that that's been pretty obvious sign this year for sure, yes, but certainly over the last, I don't know, what would you say, Kevin, the last month or so?
Oh, yeah, I would say probably a good couple months. It kind of seems like.
Here you go, 1 month performance. There's two sectors that are positive. Energy's up 6%. Tech is up 0.5%. Everything else is negative.
Can't put it any clearer than that, I suppose.
And it's interesting to see, from the indices, Russell down 5.5%, with energy up 6%. So where is that? I assume small cap healthcare. I mean, if you look at the small cap healthcare chart, I mean, that's atrocious. Healthcare in general has not been great. But if you look at something PSCH, very, very weak. And I think, if we look at the IWM ETF, I think the largest sector in the index is
Healthcare second, industrials.
Industrials is first. Okay. Are they close? Oh, yeah, here. Okay.
Mm-hmm.
Financials are up there. And then you go banks. Banks is another area where, on a positive day, I mean, on a relative basis, it's not. I'll say this. The last month, it hasn't been great.
No. And really, I think, just kind of shooting from the hip, like your insurance areas kind of seem like for financials where at least kind of more recent history, a lot of that movement seem to come from.
Yeah, they've held up the best for sure.
Using like IAK or something like that.
And you got higher highs and higher lows on both an absolute and relative basis. I mean, it's not abysmal. I mean, yeah, look at your Russell's it's dug itself into such a relative hole. We're talking about Russell 2000. We are now, in regards to its relative relationship with S&P, we're below the COVID lows. So we know, right, like right into the COVID lows, even starting before that, it really started back into probably mid-2018 and right into those March 2020 lows. I mean, small caps just got obliterated. Mm-hmm. And then they had the big rebound, right? We had the big 2020, 2021 rebound. That's where all the meme frenzy came from and the ARK returns and all that fun stuff. So big, big, big spread. In fact, off of the COVID lows, so going back to March 23rd, March 18th, 2020, depending on how you want to define it. At one point, small caps, so this is a year later. So this is March 2021. Small caps up 137%. The S&P was up 80. So it's a solid 57% spread there. Mm-hmm. A lead that small caps had as of March 2021. And they've given all of that alpha, all of that outperformance back.
Mm-hmm. And then, it could even be then some.
Yeah. depending on where.
Today. No.
Depending on, so yeah, since March 2021, the S&P is up about 12-13%. Small caps down 17%. It's tough.
Yeah. And that just IWM to S&P relative chart on a weekly makes it a little clear, but I mean, that's where it's at or just below now. It's a pretty important spot.
It's a very important spot. Micro caps, IWC versus SPX, just as, they're even breaking down. They really started breaking down below the same spot maybe a week or two ago. But again, the point Kevin and I are trying to make is, it continues to be at least a larger cap story than small caps.
Mm-hmm.
Broadly speaking.
And I think energy is one of the few places where that's kind of flipped. Like if you look at small cap energy, it's like PSCE, just to XLE. I mean, really, like pretty much all this summer has kind of been, leading, kind of like your broad energy. So,
well, and so I wonder, do we go back to, early 2022, before things really broke down, before the broad market kind of accepted that we were going to have a, supply really overtook demand. Energy really held up well.
Mm-hmm.
And I wonder if we are going to see that, because, if you look at like the sector rotation chart versus the economic cycle, like we'll say like market bottom, forest, and then it goes, there's an orange and a blue one that floats around a lot.
I think, is that the stock charts one?
Yes, there's stock charts. It floats around a lot. That's the one that I can kind of, I guess, envision in my head. But I feel like energy is kind of the last.
It's like your market top.
Yeah, so if you take that, now I think healthcare is also up there, which I guess maybe have, if we're going to stick by this, then maybe we're throwing out this theory since we kind of poo-pooed on healthcare earlier. Mm-hmm. Definitely not an outperformer. Staples, definitely not an outperformer.
Utilities,
abysmal on a relative basis. I guess they could be bottoming here. I mean, whatever. But until we were truly get a change in trend. So those keys are not showing up yet. We talked to clients, I believe in the weekly newsletter that went out a couple weeks ago. Credit spreads not showing any type of panic. If we look at high yields, continue to move lower. It's not a straight line down, but it's a downtrend, which works. Anything else? Anything in commodities, Kevin, that catches your eye?
Yeah, I think oil is probably the biggest one, right?
Yeah.
$85, kind of an important level.
Very important level.
I mean,
I'm glad you brought
pretty
that
good
up.
With what we're seeing with like energy kind of perking up.
You are spot on, right? And the same thing early Q1 2022. Oil rallies from 65 to 130. Do we see that? Again, I don't know. But hey, we're above 85, and I'm with you. I think if we're above 85, chances only increase that you go back that, we're in an uptrend.
Right. Yeah, for sure. And I guess in the energy space, on the flip side, natural gas still kind of in the basement.
Is it? No move out of, and it's tried a couple times.
Yeah, but couldn't stick it. So
yeah, it's definitely had some good weeks, but well off the highs. I remember, what was that last year? Obviously the big gas bills, especially coming out of Europe. A lot of hoopla over the energy bills, net gas prices. Yeah.
And I guess in the commodity space, the most consistent really has been like cattle. Dan and I have been talking about that one. I mean, the thing's had quite winning streak there. Live cattle.
Wow, look at this thing.
Mm-hmm.
Above those 2015 or 2014 highs. Cattle. So you're telling me
basically since last November, been undefeated.
That when I go to Wendy's, get myself a
Baconator.
Dave #1 combo. That the prices aren't going down anytime soon.
No. Yeah, if you're into eating steaks, I mean, probably going to some lower cuts lately.
Yeah.
And that's why I've been pretty fortunate to have some venison in the freezer, so I've been able to stopgap that a little bit.
I think that's a skill set that maybe a lot of Americans are going to be hoping to pick up if this continues. Maybe I'll just go kill my own meat. Nothing wrong with that. Yeah. And what is this measured in? Like, what is live cattle? Like, when I pull up live cattle futures, do you have any idea what? I mean, I get the general
contract
gist.
specs.
The price of a cow's more expensive.
But so what the contract specs are, or I guess what the difference between that and feeder are.
Like a contract. If I got physical delivery of one contract of live cattle, what is
40,000 pounds?
So just 40,000 pounds of, I assume, like frozen meat is being delivered. Okay, so 183. So how many people could you feed on 40,000 pounds?
That's a good question. Well, you figure each pack you buy at the store, right? It's probably about what, pound and a half, 2 pounds maybe.
So for 183 bucks,
it's about 2 people, 2 to 3.
183 bucks for 40,000 pounds.
Well, it's cents per pound, I think.
Okay.
That's where it always, like when you look at beans and corn, you always got to.
Here it is. Okay, yeah, it's about.
Like if you look at beans right now, it's what, $13.64, like per bushel. So that's all in cents per pound or per bushel.
It's about 40,000 pounds is 18 metric tons.
It's a lot of beef.
Okay. Yeah. I do not want that physically. I wouldn't.
And I don't think you got the freezer space for that.
Couldn't
or the pasture space.
But your community would love you.
Mm-hmm. It might.
Hey guys, I screwed up. But all 10,000 of us are eating for free for like 4 months. Sugar continues to move higher. Cannabis, I don't know if that's a commodity.
Yeah, I don't know what you call that, but
I still have a theory that one day the Chicago Mercantile Exchange will have cannabis futures. But it has certainly had its... Now, you want to talk about holes to dig out of.
Holy cow. I mean, that thing's...
It's had a good move. Let's all look at the big picture here. I mean, this could be it. I could see this being it. Done this a couple times on the way down, to be honest.
Mm-hmm.
So it is definitely a big rally the last couple weeks in cannabis stocks. A lot of them doubling, up 50 to 100% in price. I would say still the worst downtrend of any subsector of American equities.
Yeah, I mean, I think it would be hard to find something to beat that. I mean, just consistent, really clean for the most part.
Yeah, I mean,
we've
hated pot stocks for a while here. When you look at supply and demand as a group of participants, and don't know if the last 2 weeks changes anything. But yeah, I guess that's all I have to say on.
Mm-hmm. It's really the last time we've seen volume like this, I guess, and something like MJ is kind of the beginning of 2021 when you kind of get that big push, kind of that gap, and it moves higher the next couple of days, and kind of know the story from there. So we'll see. I guess to me, it wouldn't surprise me if it gets rejected here at $4.
Yeah, it was certainly distribution. We'll see if this one is accumulation, but it has continued to be a hard spot. Our favorite, well, not our favorite, but the favorite of many, I guess is a better way to put that. AMC, GME, their meme stocks from 2021 continue to just look abysmal. Not that I don't even think those are like a risk on barometer anymore. Mm-hmm. I think for a little bit there was, and I think cannabis got included in that of like, is there risk gone back in among market participants? What are pot stocks doing? What are these silly high beta meme stocks doing? And I definitely think that fortunately the market has matured past that, because U.S. indices, S&P and Nasdaq, we touched on it, still in a pretty healthy uptrend. These stocks, I mean, AMC, if you had bought and hold at any point, I mean, they're below 98% off the highs. So, mean, if you hadn't sold before this, you haven't made any money. Now pretty much significantly in the red, 72 cents a share. From $42 down to 72 cents.
It's quite the ride.
Yeah, and it's unfortunate. And clients know, if you've ever been to a lunch and learn, you know that we are pretty anti, media gimmicks and, people talking about the next big thing. And, oh, my friend so-and-so is involved in this and this AMC stock, and he's on Reddit, and they're going to stick it to the hedge funds and all this stuff that is, just millions, billions of dollars and time and energy poured into the stocks like this over the last couple of years, where people thought that they were going to stick it to Wall Street, and it just didn't come to fruition, Kevin.
No.
I am shocked. What about Bitcoin?
Just chilling.
What have our Bitcoin friends done? Back to 25,000. So same spot we were at August 2022. Obviously, high beta area. Lots of big moves in between there, and it never made it over those anchored VWAPs from the highs. It did for a little bit, for like a couple weeks, but never really sustained getting above 31,000. Back down to 25. So certainly a tough go of it as of late for the Bitcoiners.
Really, Ethereum's not faring much better.
No.
Like BTC, ETH, that's about as sideways as you can get. I guess just.
And unlike the
crypto in general.
I guess, gun to my head, it's a consolidation and a downtrend. What we're starting, I don't know. We'll see here. But it's not something we have to be involved in.
No.
We're involved in DApp for a little bit. And even those stocks, right, the Bitcoin stocks have come back to earth. They had a great breakout there, middle of June. And they're back to, right back to that exact same breakout spot.
Yep.
And not really looking too healthy. We'll see if the same thing happens with uranium here. Nothing too dramatic as yet, but
I think the big thing is $1. It just keeps chugging.
It is. And look what it's done to, I think I saw earlier today, silver miners, SLVP versus S&P, new relative lows. Yeah, it's been tough. It's been tough on the gold bugs, the precious metal bugs. Not that gold's been hit too hard. It's actually held up maybe a little bit better than I thought, but on a relative basis,
it's just not even keeping up, not close.
It's an opportunity cost. Silver definitely a little worse.
It's actually for a while there, I thought, if you look at silver to gold, I actually thought silver was going to kind of take the lead in that relationship, but it just.
Well, and that's what you want to see.
Mm-hmm. I guess you're still barely putting in higher lows, kind of from those like early 2020. Like, what was that? Kind of end of summer last year. Just slowly.
Yeah.
Slowly moving along. But like your international area, especially since the dollar started running, really cooled off, which makes sense.
They have all those hot spots now. I would say outside of Argentina, I feel like Latin America has gotten hit in the worst. China has these like days and weeks where it's good, but never. China has not been touchable for
quite a while.
A bit. People get excited, but on a relative basis, sucks. It's really sucked for multiple years. If I look at FXI, if I look at a GXC, and it's, those, they definitely fall in high beta. Most I'd say foreign stocks probably a little bit more high beta. China definitely falls there. So it has these periods where you're like, it's like the commercial with the guy with the fishing rod.
Like holding the dollar out there?
Yeah, holding the dollar, and you're like, oh, maybe this is it. And then, 2 weeks later, it's fizzled
its way
away.
Mm-hmm.
Well,
even Chinese bonds, too.
What are we using for that?
C-bond, CBON.
CBON, C-bond.
So kind of like below the 21, getting like $21, $20 area.
Yeah,
Kind of
those are.
testing all-time lows. You're getting
Yeah,
close to it.
you gotta hope that's a double bottom, or I mean, I don't have a lot of. Obviously, on an adjusted basis, they probably look better, but yeah, it is not. I mean, you got Alibaba. Alibaba hasn't done anything. Alibaba looks like U.S. small caps. Hasn't done anything for months, 18 months. So then you take the average stock in the U.S., however you want to divvy that up. NYSE composite back below 16,000, 16,100. Value line geometric, nothing. So again, the average stock, right, and this is going on. We've talked about this so many times. The blow off top in January 2018 and how most stocks have done nothing since then. I mean, we're going on 5.5 years of the average stock not moving anywhere in America. It's an interesting perspective. 5.5 years that if you just had an equal weighted portfolio of U.S. stocks, even though the S&P, right, the S&P has gone up a lot, Nasdaq's certainly gone up a lot, Dow's even done okay, and we've had big rallies during then, but nowhere, absolutely nowhere. And in fact, we've barely gone anywhere. The average stock has barely gone anywhere. The average stock, this particular index, value line geometric, and I'm not going to go over the calculations. You can go online and Google how it's calculated, and it has to do with the end-of-day close and its relative value. There's about 1,700 stocks in this index, give or take, at any particular time. But essentially is a good barometer of the quote-unquote average stock. So since March 1998, Kevin, the average stock is up 10%.
It's like almost my lifetime.
And think about there's your argument for indexing. And the S&P is up, even with the dot-com bubble in there. The S&P is up 300%, including, 40, 50% drawdowns. Average stock is up 10. So if you don't think that major indices are momentum vehicles,
I want to take another look.
Yeah, I don't know what to tell you, which is good. It's good for the average investor, the average American, who should, not be day trading stocks and picking stocks. All right, Kevin, I think we have come to the end of our time for today. Is there anything else you would like to leave our listeners with?
Yeah, I mean, we kind of brushed up, I guess, on international broadly. I mean, there's still kind of some areas there that are holding up pretty well. Like, not necessarily areas you would expect really either. It's like Turkey. Moving up above like 38. It's definitely been holding its own.
I'm going to be honest with you. At no point in my career has anyone ever talked about Turkish equities.
I can't think of a time.
Here they are.
Well, I mean, for a while there, kind of June, July, like Vietnam. I mean, Vietnam clawed its way back, which I guess isn't an area you would normally think to look.
No.
I mean, really outside of those two, kind of India is starting to perk up a little bit. We were kind of talking about that yesterday.
India definitely hanging in there. In fact, today, big gap higher today if I'm looking at NDA, year-to-date highs, actually breaking out of a pretty decent little base here. Not a little base, a longer-term base.
And actually, there's like an example, too, where if you look small cap India, so S&P, I mean, that's leading just kind of like your broad India ETFs. So kind of almost like an energy dynamic there for like small cap energy to XLE. But I would say that's even more clear, kind of more pronounced.
And if we look at India, what is our largest sector? Financials at 28%. And then tech at 13. So your financials, what is that, like IBN? Isn't that that's a big bank over there? It's held up well.
Oddly enough, so if you look at small cap India at ETF, top two are industrials and materials. Financials is third there.
And that thing is cruising.
Mm-hmm.
I mean, you want to talk about, so small cap India hasn't had a negative month since April.
Kind of has like live cattle vibes there a little bit.
And it's got about 6 red weeks in there. And they weren't even, I mean, these are maybe like 4 red weeks and they don't even close up. Right? So we talk about that. Small cap India up 32% the last few months, but up 1% the last 2 years. So time frame, right?
Mm-hmm.
Absolutely could just be the beginning of a pretty big uptrend. All right, Kevin, anything else?
I don't think so. Not for me anyway.
All righty. Well, I would be a bad person if I didn't leave our listeners with a brief thank you to our sponsor of this podcast, the Adaptive Select ETF, listed on the NYSE under ticker ADPV, helps investors access 2 of the most prevalent factors in markets, momentum and relative strength, through proprietary identification methods. The Adaptive Select ETF attempts to own the strongest 25 large cap stocks when the market is in an uptrend. And since not all market environments are the same, contrary to popular belief, Kevin, stocks do not always go up.
Oh, I didn't know that.
It is unfortunate. It's an unfortunate thing to witness.
Mm-hmm.
And since not all market environments are the same, Adaptive Select seeks to prevent extended declines by moving to short-term treasury bills and cash during long-term market downtrends. Investors can find out more, including how to invest in ADPV, by visiting adpvetf.com or calling 1-833-753-3825. Investing involves risk. It does, including possible loss of principal. ADPV is distributed by Quasar Distributors, LLC. And I hope everyone has a wonderful weekend.
Hey, have a good weekend, everybody.
Take care, everyone.